All right, testing, testing. Can you guys hear me? Can you hear me? Mr. Nick Gibbs from Investing Against the Grain, and of course, Brian White from Future Raza. We co host this every week. This one's a big one. It's a fun topic. We are covering all of these bears that I've just flipped in the last few days. You got Danny Moses. We're going to watch a video of him capitulating. I think Danny, one of the biggest shorts, right? One of the biggest Tesla shorts out there. I think he's lost his money. I think that's why he was forced to do this. But Craig Irwin, he was just more of a bear. He was the guy that was being invited every week to CNBC. He was the guy talking about, $200 price target for, oh, I'm sorry, $85 price target for Tesla. Now he's become a bull. Why now? Is it because of FSD? What happened here? Let's start with you guys. Before I play the video of Danny Moses, what do you guys think?
I think that the story keeps changing. It changes every day. But seeing that we're going to have a president who Elon has the ear of, that is alone is worth a pile of money for sure for investors. And I think as the price keeps running up, these guys have to change their price targets. Otherwise, they look slightly more foolish than they already do. And the short sellers, yeah, they're losing their shirts. I don't know if I'd put that I was the big shart on my resume, but here we are.
Yeah.
Yeah, I think you're seeing across the board, you're finding the people who were short, who, I mean, you can see in the Tesla community. I won't call anyone specifically out, but I don't need to say it. You guys know what I'm talking about. I think you're seeing people who missed out on the rally and they're upset. And so now I think people are doubling down on being on the other side, whether that's saying that, Tesla's ran up too much or whether that's saying, oh, no, everything's different now. As far as Craig Irwin, I think that's more of a case where it seems like he had a talking to. He might have had he might have been put on a pip potentially, is what it feels like. But I don't know. It's interesting times.
Okay, let's start with Craig Irwin. He was a longtime bear. He's now become a bull. Let's hear what he says and what his explanations are.
I don't know what we're going to do anymore when we look for a Tesla bear and we can't go to you. It was tough. It was tough to begin with. Why this move? And what do you say to those who will just cynically point to you and say he's been wrong for so long, he just finally had to throw in the towel?
So what I'm looking at is this quarter is probably the last quarter of relative weakness, right? My view is battery prices gave them the margin upside this last quarter, the prior quarter, and the CFO was very clear about the margin outlook for the fourth quarter. And the stock is responding to the Trump bump. Musk was one of the most passionate and authentic supporters of President Trump, and obviously a very close ally of his. Moving forward, the DOGE, the Government Efficiency Initiative, and all sorts of other things position him to play an interesting role in the Trump administration, right? So the last quarter of relative weakness, I think now he's got a new pool of buyers, conservatives that might not have looked at EVs quite as closely in the past, that allow an acceleration of demand in the core U.S. market, right? So that means we're looking at positive estimate revisions, and I'm asking myself, where are the catalysts? I don't see very many negative catalysts if estimates are going to positive revisions, and they're abundant positive catalysts. Things are going to look a lot like they did 11, 12, 13 years ago, where they can literally invent their own milestones and knock them down. Optimus, Grok, the AI initiative, the visibility around EV share gains, all of these, I think, will play to the positive for Tesla. And I think this is something that can be sustained for a couple of years. It's not like it's going to happen over a quarter or two. Bias is now to the upside, not the downside. And market cap may be huge, right? 1.1, 1.2 trillion is a big company, but they're doing big things.
It is so weird to hear this guy talk this way, because if you've been watching him on CNBC, he says the silly thing. He had an $85 price target for Tesla. Now it's jumped to $380. It's unfathomable, or I can't understand it. What do you guys think?
Why would you jump so much? Show me the spreadsheet that you put
Fundamentals?
together. Right. We know what our price targets are, but we haven't had a price target of $80 in 5 years. So the fundamentals haven't shifted by 5x in the last week. So yeah, I don't know. He's just being ridiculous, and worth mentioning. And I know Herbert and I mentioned this on a show that will come out on his channel soon, but Gordon Johnson also raised his price target from, I think, $25 to $28. Even he can see that things are going. Oh, it's more than a 10% increase in his price target. It's amazing.
So to me, this is a very interesting one because he did not address any of his previous points on why Tesla
Mhm.
should be a 80 something dollar stock. His arguments before were that Tesla has nothing that Toyota doesn't have.
Right.
He has said that repeatedly. All right. He's also said that even if Tesla was the best and we gave them credit for being the leaders and first movers in EVs, he argued it still didn't make sense that they should be worth the same as all the other OEMs combined. How does he how does he help the public make that make sense? That all of a sudden now apparently Tesla does have some technology that Toyota doesn't have. All of a sudden now it does make sense for them to be valued more than all the other companies combined. It's he's not his whole I mean, the only real argument he put forth here, it's not even autonomy, nothing like that. He puts forth the argument of, well, now there might be some conservative buyers out there for Teslas. That equates to a change of $300 in the stock price. Like it doesn't make sense. He's, in my opinion, if he ever had any credibility, he's lost all credibility because he didn't even tackle his main points on why he was short on the company or on the sell side for it. So he never addressed those key points. He didn't make any new compelling points. He didn't even use the very easy layup points he could have made. He could have said, "Hey, I saw 1010. Tesla's actually a lot further than I thought. I went took a test ride. Like this seems inevitable. I didn't think that they were this far along. Toyota definitely doesn't have anything like this, right?" And that would be like, okay, oh, he saw the light, yay, right? And that would have been a smoother transition than this. This is a joke.
I'm going to go with Nick on this one. He didn't share any thesis beyond politics have changed. Well, the politics have changed, but in a way that makes the company 5 times more valuable? No, definitely. I mean, that's crazy. You can say, well, there's going to be a better, easier path to autonomous regulation. Well, right, but there was always going to be a path. This one will be perhaps slightly easier, but they have to solve autonomy, and that's been the first obstacle. You got to solve it first. Does this mean that I mean, yeah, he's just trying to stay relevant. And I accept apologies when the person first says that they were wrong, and I'm not seeing any of that.
Yeah. In the same vein, I think it's interesting and funny that we're watching all of these analysts who have been hammering home saying it's all about the fundamentals. It's about the fundamentals. We want to see earnings growth. And until earnings growth, until you see that revenue line go up, that's when we'll give you the higher price targets. And yet, what have we seen? Time and time again, they're just raising price targets. That's it. No fundamentals. They're going to talk about, oh, Elon is now first buddy. That's the reason why this is going to happen. They're talking about FSD now. You heard this guy say robots for the friggin' first time ever. What? You're a bear now talking about robots? Anyways, let's get back to that topic because there's a lot to unpack there. But right now, let's go to Danny Moses. Danny Moses is not only a bear, he's an actual short. He shorted Tesla significantly. And just a few months ago, I can play that clip also. He was on CNBC and he said that he's going to double down when Tesla was at $175 earlier this year. And he said that this is the best short opportunity that's available out there, his favorite short opportunity out there. And now he is capitulating and he says he's out of it. So this guy's famous for being the big short. Let's see why he changed his mind here. Let's watch him.
Tesla now. The rally taking a breather today. Shares down 1.5% after new data showed deliveries from its Shanghai factory fell for the second month in a row. Yet our guest trader tonight, Danny Moses, who's been short Tesla at various times since 2016, isn't betting against it right now. And for the viewer, you're constantly trading, so keep us updated on where you are.
Listen, I first got into the trade after the Solar City deal was done in kind of late 2016 into 2017, thinking that, wow, it was an awful deal. I'm going to get into the stock now short, off and on for the last few years. The first quarter this year, when they reported,
who was the CEO of Solar City at the time?
His cousin.
Yeah. Okay.
Exactly. We won't go to. He won that court case also.
Okay.
So fast forward to the first quarter this year. It had just started to trade on fundamentals for the first time in a long time. It was hanging around $140, $150, right? So you felt, okay, the quarter was bad. What happened? Promise of autonomous day in August, which ended up getting pushed out to October. Flies to China to get some regulatory relief on certain things. And lo and behold, attaches himself to Trump to make all the other stuff go away. When the story moves from non-fundamental to technical and those nature, that's when I leave a story. And we talk about it on the podcast a lot, giving updates there. But to people that are listening now, it's very difficult, certainly to short a name that is not trading on fundamentals. It's also hard to go long a name when it's all on promises. And I'll say this about Musk. He's promised shareholders things in the past that never came to fruition, was given the benefit of the doubt. He's now talking about cutting $2 trillion from the U.S. budget, being able to basically improve the budget. And you're not going to be able to do that. So it's one thing to mess with shareholders. It's another, in my opinion, to mess with the American citizen. We'll see. But
Yeah, first of all, it's funny that he actually had to go there talking about Musk. And why do you need to talk about Musk and his impact to the government? But okay, anyways, you guys go ahead and address it first, and we can talk more about why he did this.
The problem with Danny Moses is his portfolio is in the red. It is a sea of red because he kept shorting and shorting, and Moses is trying to part the Red Sea. He's got a path forward. It is across and into the desert. I hope he makes it. No Bible jokes from Nico?
No, I don't make jokes like that. Offend someone.
Fair. Yeah.
I mean, this is what he said just a few months ago. Thanks for Jeff for reminding me of this. In case anyone needs a reminder, he called this his favorite short at $172. Let's watch what he said then.
With his short call on the stock after calling for it to head to $50 here on our show last November. So how do you feel about it now?
for someone who cares so much about the human race, he is firing a lot of humans at this moment. And everything's kind of falling apart in their core business. So what's he doing? He's pointing everybody to robo-taxis and AI and autonomy and all that. At the same time, the DOJ is now, Reuters is reporting, is investigating this for wire fraud, et cetera, because he's been selling a product that doesn't exist. So we have August 8th is this unveiling of robo-taxi day. And before that, it's going to be the vote. Shareholders are probably going to grant him $56 billion in options, obviously, here. A big news event that I don't think got enough play was an investment into a company called Wave, which has been around now for 7 years, by SoftBank, by NVIDIA, and a follow-on by Microsoft, Bill Gates personally, et cetera. $1 billion just got injected. This company is now in the process. They are using autonomy right now for driving in cities. And so I don't think people paid attention to that enough. I'm invested in a venture capital fund Compound that actually has an investment. They were there early 7 years ago, so just for full disclosure. So I've been up on the story for a long time. I think people really need to see, and I think the more time that goes by here and their core business is coming under pressure, I think this move to own it for robo-taxis and AI is going to fade over time. So 150 billion market cap at $50 seems like a reasonable valuation to me.
You're still short, and you're looking forward to head to 50.
Yeah, staying short.
He thinks that from 172 it's going to fall to 50. This was after May. And he started bringing up this issue of, there's other competitors. Take a look at Wave. They're the ones going to do this. Oh, poor guy. So it was 172. And I think he even said, I'm going to double down. And so now it's double this. He lost everything. Poor guy.
Poor guy. I don't know if he was crazy for 6 months ago, a year ago, saying, I don't see the autonomy play yet. Autonomy is hard to see. AI is hard to see. There are hundreds and hundreds of AI companies. They're not all going to be successful. I think the three of us have seen the critical difference that Tesla has, which is the ability to gather data like no one else, the ability to manufacture like literally no one else in the AI space, and the ability to actually commercialize a product. We can see a lot of these projects you see in AI, you say, yeah, it's cool, but I don't see who's going to pay for it. And with this, we know who's going to pay for it. Tesla is the customer in a lot of cases, and if not, their channels, their existing channels are the play.
Yeah, let's put the whole um short side part of it. Just put that to the side, put a pin in it for a second. I think you're seeing across the board, everybody wants to have an answer for why Tesla won't be the company to solve autonomy. And it's a little weird. Like it's like people have such a negative perception or disdain towards Elon that they just don't want him to be the one to do it. And it's weird to you would think that if someone's going to short the company, you would think that they would at least go out and experience what they have, what they're doing, right? For instance, when you heard him talk about it just now, and mind you, that was like, back in May or whatever, he didn't talk about the technology. He didn't talk about the experience of it. He talked about who was invested in it, as if by being invested in it, that means that they actually have a good solution or that they actually know what they're doing. Instead of first principles, like if you want to know what's happening on a construction site, go ask the people actually doing the work, right? If you want to know what the actual state of autonomy is, go experience it for yourself. Go drive it. Don't figure out who's the investor, who's the backer of this. That doesn't tell you anything. That's just you trying to assume, well, I imagine they know the space better than I do. They're in tech, so they must have done their due diligence, right? That's all that's happening here. They're passing on the puck on doing due diligence. And it's really not that hard to go and get a Tesla and just try out FSD. I think you'd be hard pressed for anyone who goes and experience it and then say to them, okay, now go try to drive another one. Go try to drive another car that has autonomy. Well, there's only one other option right now in the States. You'd have to go to test out Waymo in parts of California and I think maybe in Austin. Go experience that. And then you tell me where. This one can go anywhere, and in my opinion, is smoother than Waymo. Or it's going to be this company that is kind of geo-fenced. They can't even go on highways. But let's say that it's both of them. Let's say they both own 50-50. Do you see anyone else out there? No, you don't. And these two have been working on this for so long. And you're going to sit there and think that a brand new startup, that they don't know anything about the actual problem statement. They don't even know what they don't know yet. And you think they're going to be able to catch up? We've already seen this play out with EVs, where everyone thought, oh, these auto OEMs, they're going to be able to do it. It's going to be quick. It's going to be simple. They have the plans. They already have the know-how. They're going to be able to figure this out. Well, it turns out even they couldn't make such a simple transition. So it's kind of crazy with the recency. The most recent example we can see right in front of our face with the EVs, that people can't make the little step to extrapolate that out to autonomy. And you have this individual shorting, and obviously that didn't end too well for him.
We need to invest in a microphone for Nick to keep dropping because that was fantastic. There are, so yesterday I drove 12 hours, and a 12-hour drive in full meat driving is exhausting. It is painful, and you need a day to recover. I have made this exact drive once before in my Nissan Quest. And by the way, my Nissan Quest weekend never took off, so I guess I couldn't do that. But but I did it on version 12, and it was fine. It was like hanging out, and just like hanging out by myself and listening to music and the radio and podcasts, and it was fine. I got here and I was a little tired, but I wasn't dead. And that's version 12. I'm not even talking about version 13 yet. If you look back to Autonomy Day, when Tesla said, look, here's what we're actually doing. Was it Autonomy Day or Investor Day? Where they showed the occupancy network, where they showed that an intersection is not an intersection, it's not a puzzle, it's a sentence. And we're going to solve it one word at a time as new information becomes available throughout the turn. And what happened over the next week? Argo AI closed, GeoHot stepped down from Comma AI. I think a lot of these companies went to their engineers and said, are we doing something like that? And they had to say no. if we're not doing what they're doing and Tesla still hasn't got it all the way to 100 yet, what chance do we have? So Nick is absolutely right. If you're coming in with no data, you first need to gather some billions of miles of data, which no one has.
Well, okay, so let's just go back to this. Okay, he shorted Tesla. He put his real money in, and he said it's going to fall to $50. And in that show, he was just throwing FUD, right? He goes, "Oh, the Tesla's being investigated. Oh, there's competitors. Don't you know about this competitor?" Yeah, he's not there to actually do, actual deep dive. He just wants to short, and you can see that it's his anger or his feelings about Elon. That's really what's driving everything. You can hear it every time he brings something up. Oh, by the way, do you think Elon's going to be successful with the government? What's got anything to do with Tesla, the short position? He lost that bet. He thought it was going to fall. Okay, I want to change the conversation a bit to a bit more. What is happening? Why are these institutional investors in general, after the version 13 just came out a couple days ago, that's the thing that now they go, oh, it's here. So they didn't believe it until just now. Why? Is 13? Obviously we've been all watching the videos, but every time a video comes out, we see the same people saying it's nothing. It's just, there's whatever. Until you get to the March of Nines, don't call me. Until you actually have revenue, don't call me. I just care about the business first. This is an options play if it works, but I don't think it's going to be a long time. Now all of a sudden they're flipping and they're saying, yes, I'm going to go and invest in Tesla now. Why? Why this FSD? It's like, you know what I mean? Like it's FSD drop of new versions has been happening. We had that big jump from 11 to 12. Now we have something similar, 12 to 13. What has changed?
Right?
I think we lost
Speeches?
Brian.
Oh, sorry.
There.
We know what's changed to us, but to them, to Wall Street,
Right,
to
that's what I'm saying,
suddenly
yeah.
go from giving it no value to giving it outsized value, I don't know. I think they're scrambling.
Let me offer a point of view that could be seen as a conspiracy theorist.
Mm.
The S&P 500 is doing about 25% for this year. All right, that's an amazing return in 1 year. Funds, whether it's like a Gary Black or Ross Gerber, hedge funds, whoever, they need to outperform the S&P 500 to validate their
Existence.
space, their existence, right?
Their value. Yeah.
And exactly. And if they're not, well, then why would I even pay their management fee? And like, it makes no sense. I could just spend the S&P 500. I guarantee you, if you look at most of these funds out there, there's very few, if any. I'm sure there's some, but there's very, very few. I would say 95% of all funds out there aren't outperforming the S&P 500.
Right.
That's a problem. And so I think right now what you're seeing for the rest of this month, you're going to see a lot of, let's say, swaying of sentiment when it comes to Tesla, and a lot of piling into a lot of these companies because people need some window dressing for the end of
Window
the year.
dressing. Yep.
They need it. They need it desperately. And so I think a lot of this softness in the rhetoric and the sentiment shift is much more to do with them trying to goose up their numbers so that they don't have such a big delta between their performance S&P 500 than it is them actually believing this is it. I'm sure there's some of it, right? I'm sure there is some of it, but I don't think that they're on board yet with autonomy. I don't think that they're changing their opinions because of version 13. I think it has a lot more to do with the existential crisis that they're facing when the S&P 500 just crushed it for the year.
Oh man, that's great. Makes sense.
Could be. It's just a theory.
Yeah.
We'll know more
Yeah.
in January.
Yeah,
That's when
it's
you'll
just
really know.
interesting that obviously the jump happened. Okay, so we did see the jump in the stock price as soon as Elon became first buddy to Trump. Trump won. He helped them, and then we started hearing potential policies that they were going to implement. That's going to be pro robotaxi, pro Elon, those kind of things. There was a jump. Now there was another jump just in the last few days when version 13 came out. And so that's why, what's this thing, right? And I've seen other investors. Brian and I just did a show where we covered Chris Camillo. Chris Camillo is, I've interviewed him. He's a legendary investor. He took a $20,000, account and made it 60 million. And what he does is he looks at sentiment. And he was about to go big on Tesla. He has not invested in Tesla because he did not believe in just the auto business. The EV business is interesting. They will win, but it's not going to be a massive win for him. He wasn't interested in that kind of, business. And then he wasn't caring about FSD. He was all about the bot and he wanted to invest heavily, and he likes to play the options. So he was going to go pretty well all in on options for the bot. But then he just said in an interview he just did recently, last week, that this FSD, he's watched every video and he realizes that even if he doesn't believe in it, it's a sentiment. All the other people are freaking out about it, and they're believing that this is going to make the company rise, to multi-trillion, instead of $1 trillion market cap to $5 trillion market cap. And so he's actually now being forced. He said, I'm forcing my hand to now have to get in this play and invest earlier than I wanted to. So I get that investor, right? That's an investor who's looking at the promise of FSD. I find it funny when I see these institutional analysts who for months have been saying it's all about earnings, earnings, earnings. And all of a sudden they raise their prices, they switch their tone, and then they're talking FSD now, they're talking bot now, when the exact same thing they were saying earlier, only when it turns into revenue, that's when I'll care about it. Right now, it's nothing. Or that, just like you said, Nick, there's competition. We've heard, Gary Black say, yeah, I think this is a technology that will succeed, but everybody will have it. Well, then why is everybody jumping? What has happened with FSC 13? Did people think now that it's not going to be everybody? No, right? So.
And if everybody's going to have it, where is the confidence in all these other players? I'm not seeing that either.
Yeah,
good point.
I wouldn't link so much just the stock goes up a couple bucks. I wouldn't link that to version 13. I would see those just as separate in general.
No, there was a rash of institutional analysts upgrading as of 2 days ago. That's what I'm referring to, right? Because of FSC 13, specifically when that dropped.
Did they say that much?
Mm-mm. Yeah. Well, yeah. Stifle raised it to 410. Craig Irwin, that's what he's saying.
Of autonomy.
What happened on Monday, which is after the weekend when they dropped it, and even Craig Irwin said, or somebody else said, yeah, we didn't expect them to drop this at this point of time.
Yeah. I'd be curious to see like how much they actually attribute to FSD 13, and two, is this just a nice way to cover, have like a little cover for, we didn't expect this. Like they just, you're making it a bigger thing than what it is. For us, it's not really that big of a deal because we've been watching this all along, right? Like 11 to 12 was a huge deal, right? That was a huge deal because that was a fundamental rethink of the approach. 12 to 13 is a big deal in the sense that this will probably be the version. The 13 will be the branch that has end-to-end feature complete and all that. So in that sense, it's a big deal. But none of this is new, right? Like this has all been known. I don't know. It feels shady to me. The individual you're talking about as an investor, even he still says it's a sentiment thing. If everybody else believes this, what do you have to do to get these people to go experience this? Like, go get in the car and go test it out. Like, it's insane that people won't just go and experience it.
A good example is Bob Lutz from GM had never seen a Tesla in person until after he left GM. He said, I'd always heard the panel gaps were terrible. I saw one in a parking lot. I went up and looked at it and I was like, what are they talking about? This car looks fine. It's like, you never looked at it. Oh my gosh. And there are analysts, and I've seen investors both in favor of and against Tesla who have never driven it. I invested before I had ever touched one in person, just on the fundamentals of the company. But, obviously my conviction has solidified somewhat now that I have one.
Let's go to stock price predictions, our favorite topic. So, Nick, I had asked you several months ago, where did you think stock price would be by October 31st? And you said 350. And it was like shocking at that time, right? I think it was 270 or something like that. And the sentiment was really low. And you laid out the reasons.
220.
Was it 220?
Yeah.
Oh, man. Yeah. And you said 350, and we're all like, no. And you just like laid it out, right? The three major events, 1010, earnings, and then the election. Yeah. And here we are. And so I give you tremendous credit because, I remember saying to you that I think that it was very bold of you at the time. Brave, very brave. Because, a lot of us had PTSD. Many of us don't want to say the stock's going to go up because we've been burned a few times for several years now. And then you stood up and said that, and it happened. Where do you think the stock's going to go by the end of the year? Some people are saying that we could actually hit all-time highs before the end of the year. I'm not willing to go that route, but there's people who are saying that at this point, getting caught up in this whole, rush.
Yeah. So first of all, that was dumb luck, right? Like,
Yeah.
it's dumb luck that I got it right about the price. I could have easily made the argument the other way around, but I'm more bullish. So don't think too much about what I'm going to say now as being right or wrong. We're all just picking a number out of the hat at the end of the day. We don't know what's going to happen. By the end of the year, it's really interesting. I think there's a lot of people who really want to see the stock run up and think that's going to run up. Like you mentioned, all-time highs. I kind of don't think that's going to happen. I think that there's going to be a lot of hesitancy going into January 2nd or 3rd to see what the final delivery number is, see what that looks like, see how the forecast is. And I could see us actually going down a little bit, I mean, not crazy, but I could see us being anywhere between where we are now, call it 360 to 300, just hanging out there until earnings. And I think at earnings, we'll get some better clarification where things are at, what's the roadmap, when will we actually launch these robotaxis in Texas and California. And I also think come January, you'll see who's actually bullish on Tesla and who is window dressing, right? Because once those numbers come out, we're going to hear all the rhetoric. If they just matched or if they're slightly under year over year, you're going to hear a lot of noise. And that's not going to be great for the stock. So
Yeah.
I would caution on to think we're just going to run to all-time highs. I would also say it's probably not good to run to all-time highs right away. Like, let's take a chill pill. Let's consolidate a little bit before going to run. But I will say that if we press up against, just to take the other side, speak out of both sides of my mouth, if we break past like 363, there's a lot of pent up build up there. We've tried to test that like 3 times now, and we haven't gone by or gone past it. So yeah, it'll be interesting.
Yeah, I always make my stock predictions 10 years out. 5 is a good minimum for me, and my belief is that Tesla will outperform the S&P 500 over that time frame. I find when making bold predictions, with stock prices, I just can't do it. I've tried to model it a million ways, and I'm not successful at doing it. And I think other people are also, when you look at the big names who get on TV and talk about it, they are also, I don't know a polite word for it, but Jim Cramer. And, even a blind squirrel nuts once in a while. I'm sure that's the figure of speech I'm looking for, but that doesn't mean that they're, they find a nut, as I'm not sure how it goes, but there's a lot to be said about understanding what the company is, how it's operating, and who the competitors are. And it looks like a lot of these analysts are trying to analyze 20, 30, 50 companies, maybe 100. And I don't believe that anyone has the sufficient headspace to understand a company like that. When Shanghai was being built, when Berlin and Texas were being built, I was watching them. I was watching them hawkishly. I was watching every minute of every drone pilot every time it came out. And that gave me the ability to see something that others did not see. And when people say to me, "Oh, I bet you wish you sold at 400." No, because if I'd have sold at 400, if I was that kind of investor, I would have sold at 100 or 50, because my cost basis was at the time, I think 13 something. So I would have sold out long before and missed all of the run up. That's not who I am. That's not what I do. And I could see something that they couldn't. And today I still see something that a lot of them cannot.
Okay. Yeah, I don't know if it's naive to say, and I think that there's an argument to say that Tesla is not being seen anymore as just a car company. So I know, Nick, you were saying that, if the numbers are soft in terms of production and delivery, I don't think that matters. So let's say that in January 2nd, they report that they missed it. They didn't get the 1.8 million. It was 1.75. Okay, they missed the mark by 500,000. I don't know if that's going to make any difference in the stock at this point anymore. What matters, I guess, would be January 20th when they release the earnings. If there was a tremendous miss in margin, that I can see impacting it. But the volume of sales, I think it's already built in. People understand it's a flat year, maybe in a down year. The conversation seems to have changed to Tesla's not just an auto company. They're talking about energy now, number one. And surprisingly, we're hearing more and more of these big whale investors talking about Tesla being, an FSD, and even we're starting to slowly hear some of them bring up the bot at this point, which are the story stocks. And so you can only talk about the growth stories about a company like Tesla when the base business is solidified. And I feel like that's what Q3 did, is show everybody that the base business solidified. So I'm not so sure that a small miss is going to do anything. What do you guys think about that comment?
Well, I did want to address something Danny Moses said earlier about how Elon's putting people out of work with autonomy and robots. And I think that's the dumbest thing I've ever heard. We've been doing that since the dawn of technology. We have fewer farmers than ever, yet more farm production. And making things more affordable is almost universally a good thing.
So I have a question for you, Herbert.
Wait, are you just going
Let's.
to answer my question though, or no? You're just
Well,
going to skip through it?
no. This has to do with your question.
Okay, let's go back to that.
Okay. Let's say that Tesla came out and they had a record number of delivered vehicles. Record number. In fact, not only do they have a record number, but year over year was up like 70% year over year.
Wait, you're saying by December, like the end of this year?
Let's say
What?
January 2nd,
Yeah.
we find out that they have record numbers year over year, everything. In fact, it's 70% year over year beat, right?
So like 2
Quarter over
million or something
quarter,
like that? Like some ridiculous number
quarter
like
over
that?
quarter over quarter, maybe it's like 15, 20%, but year over year is like 70%. Huge, massive, amazing numbers,
Wow.
right?
Yeah.
Let's
Yep.
play with me, play this game with me.
Sure.
Let's say that you had that information ahead of time and you had $1 million. What would you do with it?
That's obviously that's a very significant number. And so yes, it's going to go up. Stock will go
No,
up if it's 70% higher. But if it's like
Okay.
5% higher, not going to do anything. 5%
so-
lower, not going to do anything.
If you had $1 million, what would you do with it?
It doesn't have to be that. I'm already doing it now. So what do you mean?
Okay. All right.
If I had $1 million, I'd be doing it now.
Would you buy Tesla stock or would you not buy
Of
Tesla
course.
stock?
Of
And
course.
you knew this information. You're the only one that knows this, okay?
Yeah.
You think the stock would go up, right? This is why predicting what the stock market's going to do when we think we know something or we think something's baked in doesn't make sense. This was the situation January of 2022.
Mm-hmm.
And the stock went up the very next day, we spent the
fell.
next 3 months going straight down.
Yep.
Despite that. So my whole point is to going back to what you're saying, it may or may not be baked in. We don't know. At the end of the day, we don't know what the market's going to do.
Mm-hmm.
We have no way of knowing it. The only thing we know is what we experience when we drive Versa 13, what we experience with our Teslas every day, the seamless charging. That's all we know. The market, even if you had the information, look at the Fed right now, Jerome Powell speaking. If you knew what he was going to say ahead of time, you wouldn't even know which way to put the money on, because you don't know what the market's going to do with that.
Yep.
And so my point is the market's really efficient. And even if you think you know something, you don't, because
Yeah, I
you don't
understand
know if
with
the
you.
market's already
But
priced in
again,
or not.
when you ask me that question, I'm not worried about what stock's going to do in the next month, right? I was just still thinking about years ahead. But you're right. I mean, obviously, people will say, well, then why don't, if you knew what was happening, then buy it when the stock is lower. Yeah. I don't know.
Yeah, it would be easy. Everybody would do it,
Yeah.
right? Everybody would have
Xander
been
says, I'll buy
buying.
it. Xander says, I'll buy it. Of course you will. This guy knows. Xander's the best.
Well, what
Okay.
do you think? Like, what do you think is going to happen? Where do you think? Where do you think we end the year?
I think it's flat. I think where we're at right now. It's a combination of people that are FOMO and wanted to get in, which is we're going to start seeing more and more. And I think the window dressing is a real thing. So more and more will buy. But I also think on the other side, there's people that, no news the next several months. They think that it's already done its run up. And like you said, the 360, they're willing to sell. I think it's going to be flat. I'm not one that's going to predict that it's going to get to 400 and so forth. I do think that sometime in the next 3 months or 6 months in the new year, that we will hit all-time highs. I think that's when, again, FSD will keep improving. The conversations, that's what I was trying to do this whole show, right? The conversation has changed, not just from us Tesla retail investors, but, the traditional institutional analysts, people that you don't normally, they're talking about FSD now. They're talking about the bot now. And so they're now having the permission to price in the story part of Tesla, these future things now, because they feel like there's nothing, the base business is solidified. That's what I keep saying, that once that is done, we're back to a 2x stock, right? A beta stock. So investors will invest because of the promise of the future now.
So I want to ask a question about Q4 earnings. I was having a productive conversation with someone who was saying that they're worried that all these incentives that are being offered at the end of quarter, the very aggressive referral bonuses on SX and Cybertruck, the generous ones on 3 and Y, the financing, all of that, that this could have, or that this is proof that there's just no money to be had. And I said that I felt the same way when Tesla dropped prices $5,000, but the margins remain solid. Do we think that these incentives are going to eat into the margin in Q4 noticeably, or that these just match the cost of goods reduction?
Herbert?
No, I have no answer to that. I don't know what's going to happen. I don't know what's happening to these things, but I don't know if anybody does know. But I just remember Elon saying that we're going to maximize volume sales over margin, especially if he is very bullish about robotaxi. And from everything we've been hearing, from all the actions that they're taking at the company, it's all pointing to the bullishness that they believe robotaxi is real and it's coming next year. So if that's the case, you would increase the sales of the cars, and you have all these levers. By the way, though, these levers, most of them don't impact the margin. So 3 months free FSD, 3 months free supercharging. These kind of things are fantastic promotions. The referral programs are not actually going to impact the margin so much, because it forces the people who refer, let's say $2,000 of referral credit, but it's actually Tesla credit. You have to spend it on Tesla to get that. And then the only ones, of course, is 0% interest rates, but some of those are transferred to third parties. So I don't know yet if these promotions will impact margins as much, but I think that they're gonna do everything that they can to beat last year's number. They'll do what they want. They just to match it at the very least is what I'm thinking that they're shooting for. That's where I'm at this point.
Yeah, I think it's also kind of a non-event in the big scheme of things. Um, I think there's enough offsetting too with the energy side of business and being able to recognize more of FSD now uh, than later or than they have been able before. So I don't know. I think everything kind of smooths out as far as margins go. And even if they're a little lower, but like as long as they're still decent, that's all that matters. From a Tesla perspective, I think it's all about two things. One, making sure we're maximizing the footprint we have, right? Because that's important for the numbers. But two, who cares if we took less margin on a car? It's who cares? Because what's more valuable isn't the margin we get on the car up front, but it's on the data collection that car helps us get, right? It just it amplifies it, especially across the world, right? We're probably good on in the States as far as that goes, but we need probably a lot more in Europe. We probably need a lot more in China. We probably need a lot more in Australia, et cetera. So I think that's really where their focus is on. And it would also be interesting to hear them kind of give their perspective on that. At the end of the day, what's more valuable or what's more important? Getting more
Yeah.
cars out there to be able to get more data to feed back in to accelerate, autonomy, or extra 1-2% in margin. Like what
Especially now, right? Because
yeah.
they just turned on the Giga Texas Cortex. They actually did confirm that FSD 13 it was powered by Cortex, and then they're 60% turned on. Now it's going to be 100% soon. And then there was a line there that said that XAIs, H100s are being used for FSD. And so now that you have this increased compute power, you can accept more data, more videos, and they can use that more. And so maybe now at their point is like, yeah, let's go ahead and just, supercharge sales of vehicles and we'll make it up with FSD uptake. That's the interesting thing is like with version 13.3, if it comes out, we don't know if it's going to come out by the end of this year or not, but if it does, and it goes wide, it has the potential because it's so well received at this point. It can do summon, right? It can do park to park. It's being able to, do things that we're seeing videos every day for the last several days here of it doing, getting itself out of weird spots. I think we're at the point now where people are going to want to use it more, but also buy it. I had my daughter, who I bought a Model 3 for, an older Model 3, and she just finished her 3 months free FST. I was shocked that she asked me, can we continue can we continue that? Because she doesn't, never cared for testing FSD. She wasn't one of those people. But I said, well, what? Why do you want this? She enjoyed the parking, the ability for it to park, self-park. She doesn't like doing that part. And so it's like, oh, okay. Yeah.
I'm surprised you didn't make it mandatory. Like,
Well, it's my daughter.
I feel like
I don't.
it's just
Yeah.
so unequivocally safer to have
Yeah.
FSD on than not.
Yeah.
I don't know. But going back to what you were saying before, though, again, going back to the numbers of it, Brian, with when we're talking about margins, it's a intellectual exercise you have to put yourself through, and there's a lot of assumptions you have to make. But I think you really, if you're being intellectually honest with what Tesla is as a company, even if you think it's a 10% chance autonomy happens, you still have to do this work, in my opinion, which is okay. More vehicles out there in sacrifice of margins. Let's say that takes a 2% hit on margin, but by doing that, we shift the timeline left on when we will have robotaxis. So maybe we get robotaxis an extra 3 months earlier. Well, great. We make 8, 10, whatever grand per car. Maybe we lose 2% on that. But now we shifted the timetable by 3 months, and each one of those months produces 50, 60,000, like who knows, right? So like you have to factor that in everything in totality, not just in the myopic view of what this quarter is, what this month is, but looking at everything in totality. And I think it's really hard. It's not easy because there's so much assumptions you have to make. But if they're telling you this is the future, this is our future business, this is where we're going, I think it's intellectually dishonest not to do that homework.
The difference is time frame, right? So you've heard some shorts tell you that, yeah, but 2040, sure, but not till 2030. So that's too far away for me to care. It's what matters is the next 3 months, next year.
But
That's
it's
what
not.
matters.
But it's not, because if the company's telling you this is where they're prioritizing, then you need to know that and what the effects are going to be. So it doesn't matter what you care. What matters is what the company's telling you they're going to do. Now from
Right?
there, you can do what you
No, I've
you
heard
don't
lots of
agree.
investors. Yeah, a lot of no, I agree with you, but lots of investors are saying that you don't believe everything a company says. You cannot agree to whatever they say.
If a company tells you this is the future of the company, it's this or nothing. The company's worth nothing if we don't solve this. Yeah, you should probably listen. They're not just telling you, hey, we think we're going to try this experimental thing. No, they're telling you the worth of the company. If you're not invested in the company for this, you should be out. That's the kind of thing you should listen to. Unequivocally, but bar none. Like, all stop. These aren't my words, CEO's words.
Yeah, but again, words of CEO or companies is worthless to many investors.
Well, those investors aren't good investors then. They don't know what they're invested in.
Yeah. Yeah, that's the big difference, obviously.
I agree on all points. There you go.
So yeah, so I mean, okay, back to like it's one thing for us Tesla retail investors who's already believed in the story. We believe we've actually been watching Tesla and Elon achieve the impossible. And we have been saying that FSD is going to be going through this exponential curve, and we're seeing it happening. This is now the second step change, that it actually truly is 5 to 6 times higher, better than it was in February FSD 12. That's a big leap, just like we saw from FSD 11 to 12. It was exponential. But there's still other. It's like we're now seeing more and more non-Tesla retail investors who are just out there, who don't follow X. They're starting to hear this. They're starting to invest. They're starting to realize that this is actually coming. They saw the Cybercab. The Cybercabs are being toured around. They are hearing. They're starting to hear. I still think I agree. I agree with people. What do you guys think? I've heard somebody say that it's less than 0.5% of the population knows that Tesla has self-driving cars.
Oh, I would, it's very, very low. And
one?
I
Yeah.
I don't know. I would say of the people who do know that this product kind of exists, the misconceptions are absolutely rampant. I've seen people who honestly believe that very first crash back in, what was it, 2016, is still the software that's running today.
Right.
And that is, the absolute dumbest take in the world. You should not be sharing your opinions if they are that wrong. You should be ashamed of yourself. But these cars, they are killing people every day. No, they're saving lives every day. And if you're using it as intended, it is the safest means of travel, apart from perhaps aircraft.
I take the over. 0.5% of 8 billion would be 40 million people. I think 40 million people know about this.
So you agree with the 0.5% number?
No, I think
You
more.
think
I think more.
You think 1% people?
I mean, how many followers does Elon have on X? Like
200 million. All right. So
200
yeah. So
million.
you think
Okay, right there. Yeah. So there's definitely more than
So you think maybe 100 million people know? Okay, that's fair.
200 million.
Yeah. So they're aware, maybe, but it's still not yet. Investors are not investing in, and that's where I'm just pointing out that there's a pocket of investors that are starting to now invest that wasn't before. That's what I'm noticing in the last several days, and so that's the big change, right? FSC 13 is making more people believers in the stock, or wanting to get in it, or feeling like if they don't get in it, then they're going to get lost. But yeah, the other conversation is like those people who is adamantly shorts, adamantly bears, and then they got caught because the stock rose. Now what? What do? They need to find an excuse to get in, right?
Yeah. Like I think you're seeing that right now within our community, that there are people who sold thinking that they were smart. Stock ran up. Now they're pissed. Now they feel bad. So now they're thinking, oh, it's gone way too high, way too fast. Like, it's got to come back down so that they can get back in. And so now you're seeing people flip. Like it's. I almost guarantee you that's what happened.
Yeah.
I've
And
seen those
it
people.
sucks.
Yeah,
Yeah,
I've
it
seen those people.
sucks.
I'm gonna buy when it dips again, and I mean we saw people do that 2 splits ago. I just keep selling and then buying back in when it dips, and sometimes it doesn't dip.
Yeah. Hey, don't get me wrong. It could dip. You could look like a genius when you're done. But I guarantee you won't do it again. Guarantee you were scared and you're like, oh man, if this is it, and I just missed out on the biggest run. Imagine if we go to 600, 700. Like, you're just gonna feel like the biggest idiot. You waited all this time just waiting. What? So you could eke out a couple grand?
But
Like, it's
Nick,
insane.
FSD tracker tells you that they were nowhere near. Sorry.
Yeah.
FSD tracker.
FSC tracker is great and awful. It's great
Yeah.
because it gives people something to look at and reference, but it's crowdsource, and it's only as good as anything that crowdsource is, right? Like, it's not a high fidelity of accuracy for what Tesla's looking at and what they're, gearing towards. Um, there's a lot of things that people take over or they consider critical interventions that we've all seen this, right? Where there are certain things that people will take over for that you're like, man, if this was an Uber, you would not have said anything. You would have been in the back, you've been on your phone, you wouldn't have taken over, and it just is what it is, right? Or people will just take over because like, oh, this is annoying. It should be going faster. Again, if you're in the Uber, if you're in the back, you wouldn't be doing like it's so subjective, right? I take over, well, sort of used to. Now I kind of don't, but I used to take over every time at the end of the drive. Why? Because it sucks in
Yeah.
parking lots every time.
Apparently, yeah, somebody did an analysis of the FSD tracker and they said just like that. I think 50%, something really high number of interventions on FSD tracker was because of the ending and the beginning. Well, guess what? FSD 13 deals with the ending and the beginning, the parking and the unparking, getting it out. And so that's going to be interesting to see there if you care about those anecdotal, communities provided interventions, which includes everything, right? Includes everything. That's just crazy to even consider that.
I will say though, I do think that I think it was I don't know who was talking about it, but I do think version 13 can and will eventually be the version that starts to see meaningful adoption of
Yeah.
FSD with the masses because I think 13 will get us to unsupervised, and I think that's the biggest thing. Like, people are like, well, what's the point? Like, I hear this all the time. Well, what's the point of it if I can't like sleep or if I can't like look at my phone? And it's like, for some reason, it better either do everything perfectly and I can do nothing, or it's not valuable. Is how so many people see it.
Which is wrong. Yeah, agreed. Yeah.
Cool.
So you're saying that FSD 13 is the one you might see, what's your guess? 50% of Tesla owners will buy it and use it?
I don't think it'll be anywhere close to that high. I think there are traditionalists who won't even try it. I think 50% won't even, when they get a free demo, won't even use it. And that's unfortunate. I think a lot of times for a new experience, you need a guide. You need a Sherpa to walk you through it the first time so you understand what's going on. But we'll see. I just think 50% is way too high.
All right. Thank you, guys. Stay on the channel, and Brian will address all the questions that came through. Lots of them. Thanks, everybody. See you guys next week. Bye-bye.